Hello, welcome back again. It's amazing, and I'm excited to have you here again. Okay, so today I will be walking you through Total Energies net profit. So Total Energies is actually a very renowned company in the oil and gas sector, and they're actually doing very well in the industry. So today would be taking a glimpse at what their net profit actually looks like. So this analysis is spanning across the space of 10 years, which is from 2014 to 2023, and I hope these numbers are actually reflecting well. Okay, so the net profits is actually in some case we can actually refer to it as net income or bottom line, and this is the total earnings of a business after deducting all expenses, their taxes, and other liabilities from its total revenue. So it represents the company's true profitability, and the net profit is a key indicator of a company's financial health and success. So you want to measure how or evaluate how successful or healthy a company has been over a period of time. A good place to take a look at is their net profits. What does their net profit look like over the years? What's the consistency? Has it grown over the years? Has it been stable or has it declined? And then that can lead you to a conclusion, or that can inform your decisions about that company. So, and this can actually be obtained by subtracting all expenses from the total revenue that has been generated for that particular period, be it a week, be it a month, be it quarterly, be it yearly, or whatever it is you want to mention. So some of the importance of this net profit is it helps to measure profitability. Like I mentioned before, it indicates financial health. It influences stock prices and investor sentiments. It affects ability to pay dividends and invest in growth. So the net profit can actually influence the creditor's decision if they are to give you credit or not. So because they want to see exactly, so it impacts creditworthiness and loan application. So that is this actually highlights the fact that it's a very crucial metric to pay attention to as an individual or as an organization. So to optimize net profit, you have to increase revenue through sales growth or pricing strategies. One can reduce costs and expenses through efficient improvements or cost-cutting measures. You can improve operational efficiencies and productivity, and it will reflect in your net profits. You can invest in high returns project or initiative, and it will affect your net profit. So on the flip side, if you do not do this, it will also influence your net profit. So whatever you do reflects in the net profits, whether you do them well. The efficiency or inefficiency of an organization can actually be will reflect in what they get in their net profit. So also another thing to leverage on is to optimize tax strategies and manage working capital effectively. So these are things that can help companies to make better profits at the end of the year. It's also referred to as end of year profits. So by focusing on net profit and its components, businesses can actually make informed decisions to drive profitability, know things to avoid and things to leverage on, and to grow and to learn long-term successes. So we can focus on long-term successes actually. So let's take a deeper look into what's the net profits of TotalEnergies, this wonderful company and organization in the oil and gas sector. Let's take a glimpse at what their net profit has been over the period of 10 years, which is 2014 to 2023. So we could see this area chart that's showing a very inconsistent shape, and we could see that, but what gives me joy is that towards the ending part, well, it's actually kind of not too bad. But let's see where they began from in 2014. So in 2014 they began with a net profit of 5 billion naira. So these amounts are actually in thousands. So in 2014 they began with 5.2 billion naira, and there was a slight decline after then. In 2015 it moved to 4 billion naira. I think they lost 1 billion in net profit in comparison to the previous year, and then poof, there was actually a spike up. There was a significant growth in as almost that's over 200%, almost 300% growth between 2015 and 2016. So that was a very amazing work there. But then fortunately there was a decline in 2017, and a slight decline again in 2018, and then a very significant dip in 2019 and 2020. This has actually indicated a very bad market for them in these 2 years. Yes, we can talk about the COVID-19 in 2020, but then what could have happened in 2019? Is it the competitors? Is it bad roads? Or what could have influenced this thing? Is actually something to learn. But then I saw it actually very clear in here that they observed the situation, they observed this, and obviously it wasn't good on their returns at the end of the year. I believe that targets were not met, and then they observed it and they took a very good initiative, and then adjustments were made, which is actually apparent in this chart here. So we could see a very significant spike here from 2020 to 2021, which was more significant than the one they had in 2015 to 2016. The one in 2015 to 2016 was about almost 300%, and the one in 2020 in 2020 to 2021 was actually about 800% or so. So this is actually very significant, and they tried to maintain that, although there was a decline in 2022, and then in 2023 there was actually a drop here. But regardless, comparing to what they have in the past, although what they have here in 2023, if we observe in 2016, it's not actually showing that they are doing very, very well in 2023. But then I believe that their adjustments are in place, their strategies have been adjusted to take this back up, because I believe that if they take a regression and observe the strategies they adopted that sponsored this spike in 2021 and 2022, I believe that, well, even if the same strategies did not work, they will just need to do a little adjustment and they will find themselves back up, because this 12 billion they are in is actually is slightly far away from what they made in 2022. So in 2024 we hope to see them going upwards and all that. So now, like I mentioned in the beginning of the video, that there has actually been a somewhat inconsistency in their net profits generation, but then I want to trust that this company will do actually better. So if you want to make investment in the company, you want to buy the shares of a particular company, the net profit is a very, very, very good place to look at, because it actually shows their operational efficiency, how well they're able to manage their taxes, manage their costs, manage pricings and all of that. is what the net profit actually reflects. So that is actually all. And we can say from here that okay, in the past 2-3 years they are actually in a very good financial health, and that's a good thing to see. But 2019 and 2020 indicated a very poor financial health and efficiency. So that is all about that. So take notes, and observe this metric to the closer I think the closest revenues that indicates the mother. I think I'll call the revenue trend analysis the mother of the father. I'll call it the father rather. I'll call it the father of financial health. And I'll call net profit the mother of financial health. So once these two are okay, once you observe that the net profit is okay, the revenue trend analysis is okay, I believe that every other thing will fall in place, and it will actually grant them creditworthiness and all of that. So that will be all for this video. Thank you so much for staying till the end. And if you have any concerns, any question, a different point of view about these charts, about the analysis, about the ideas, you can actually drop that in the comment section. And do not forget to to subscribe to the channel and hit the like button. And then until we see you again, thank you so much. Bye bye.